Then, of course, when dividends are paid, hopefully a lot of that money will make its way back into the market. For today, we are expecting to see a weaker start to the month of March, but that's after an extremely strong February as well as January. In fact, the last 15 weeks, 13 weeks of those have been gains, and the Aussie share market looking like it's going to post another weekly gain this week.
In terms of earnings, we have, of course, seen officially the season come to a close yesterday, but we've got a couple trickling out today. Silver Lake Resources, one of them, in that gold space, which has come under pressure again the past couple of sessions and is likely to be under pressure today after the moves overnight. What are you expecting from Silver Lake?
It's been a very difficult time for gold stocks. Just over the last 3 months, we've seen gold prices down 7%, but the gold sector here in Australia is actually down by 18%. And if you have a look at a stock like Silver Lake, that's down by 37% in the last 3 months. Gold prices are a big factor, and I guess if we have a look at gold prices, it affects the sentiment as well as the underlying business of gold stocks. But gold stocks are also competing for capital on the ASX, so they're subject to the normal things that investors look out for, things like cash flow, things like valuations as well. We have a look at Silver Lake Resources. This is a gold producer. The good news is that it's debt-free. It's producing at the moment. We have a look at some of the numbers coming out today. We're seeing gold produced up by 37%, and then we've seen revenue actually up by 27%, gold sold up by 27% as well. If we have a look at Silver Lake as a business, we know that it's taken over Integra, so it's looking at the integration of that at the moment. But unfortunately, we've seen gold prices down another 1% overnight, so that's going to be a big headwind for these gold stocks today.
Julia, I just wanted to ask you about Fairfax. It's up 10% for the week and on very high turnover. I think, it's been one of the most heavily traded stocks for at least 3 sessions this week. And today, a bit of a milestone, it stops issuing its broadsheet format of its newspapers. Do you think there's still a bit of life to be found in Fairfax yet?
I think what we've found with some of these beaten down cyclical stocks is that they have made a very strong comeback. I think part of that is the amount of stock which is short sold. If we have a look at the 2 most shortest stocks on the market, they're Fairfax and JB Hi-Fi. If we have a look at these 2 stocks, they've made a huge comeback. As you mentioned, Fairfax is up by 10% for this week, but JB Hi-Fi has also done well. Just over the past month, it's seen a jump of 27%. So it does look like some of those shorts may be pulling back on expectations that cyclical conditions are improving here in Australia. As you mentioned, for Fairfax, it is dealing with 2 issues. One is the cyclical part of its business, and that seems to be improving, or the market does believe that that's going to improve. And the other side is the structural, the fact that we have seen, I guess, readers declining in terms of its traditional newspapers. So trying to move to a format which will attract news readers as well as advertisers back. And that's the key here, the advertising revenue that's really seeped out because of the internet and those advertising dollars going towards those internets. But I think it's been a much better month for those cyclical stocks like the media and the discretionary retailers, and we are expecting to see that run continue.